The fracking debate heats up in New York, and we've got some big news on some big deals from Devon and Petroleum. It's time to go digging for value. I'm Allison Southwick, and I'm joined today by Mike Olson and Tyler Crow, analysts here at the Motley Fool. Our first story today is looking at Fast Company. They are asking the question, can Walmart shake up the renewable energy sector? When you think green, you don't necessarily think Walmart, but the massive company is looking to procure 7 billion kilowatt hours of renewable energy by 2020. That's the equivalent of powering 620,000 homes for a year. Man, that's a lot.
Yeah, that's, when we talk about it too, saying it as 7 billion, obviously when we look at renewables, it's more than just solar and wind. But let's face it, when we're looking at Walmart, a lot of the program they're going to be looking at as solar. And when you think about it in that way, just kind of giving a rough estimate, the United States only produced about 4.4 billion kilowatt hours last year in solar energy. So this is a really monumental shift on what is going on with a company like Walmart.
And what companies are they working with on solar here?
Sure. Well, one of the really ones that it could really move the needle for, probably more than anybody else right now, is Solar City. And one of the reasons that this is happening, and full disclosure, I actually am a shareholder of Solar City, they are looking to install about solar panels at about 130 facilities at Walmart right now in 2013, which will be about 70 million kilowatt hours. Doesn't seem that significant in the terms of the grand scope of Walmart. It's even less than 1% of what they're trying to do. But for Solar City, that's going to represent about 13 to 15% of total installations for the company this year. And if you kind of look further down the road for Solar City, and based on where Solar City operates and the type of stores that Walmart has in the area right now, that could go out to another 1,000 stores at least. So that could be a really big boom for them going down the road.
Right. As the article points out, Walmart doesn't do anything unless it's cost effective. So do you think they can prove this out, that renewables really do help your bottom line?
Well, actually, they already have, because with looking at it, and obviously, like they said, they're not just going to put solar panels on any place. They're probably not going to put them up in northern Maine because they're going to be covered in snow half the season anyways. But if you look at it, the places where they have strategically decided to use something like solar panels at their facilities, they're saving about $2 million in last year in utility bills back in 2012. And one of the reasons they've been doing it is working with somebody like Solar City, because they're not making any actual down payments on investments or anything like that, going all through the headaches of the regulatory process, procurement, or anything like that. Go to Solar City, say, we'll install it, you don't pay anything down, you just pay us like you would your regular utility bill. $2 million saved. It's a pretty good deal for them.
So then, we've been talking about Solar City. They've been dealing with Solar City. You own Solar City. But what are some other companies that people should maybe be watching?
Sure. Well, Solar City is the largest player in this kind of third-party distributed solar. But a couple others that are really making a big push into it right now are one of the largest panel manufacturers right now is SunPower. They've been kind of looking at the utility scale, but all of a sudden this residential distributed power is looking much more attractive to them. So they're going to be really moving into it, who could be a very large player, because they do have the best tech in solar right now, and as technology costs come down, they could be a big entrant into that. And then you've also got utility companies like NRG Energy, one of the very large, I guess you could say, utility suppliers and construction companies associated with solar. So them coming into it, those could be very large disruptors for the residential solar, distributed solar, and they, could throw Solar City off the rocker. But right now, Solar City's kind of holding strong as the market leader.
All right, Fuel Fix is reporting that Petroleum is buying up oil-producing assets in Utah's Uinta Basin. They've dropped about $650 million so far. Mike, what can you tell us about the deal?
Okay, well, Petroleum, kind of a consistent knock on this stock has been they have very attractive natural gas assets, but of course natural gas, it's been in the can for about the past however many years. And so shareholders have been clamoring for oil from Petroleum. They get this in the Uinta Basin. The initial take on the part of the market was that this isn't such a great deal. There are some constraints from an infrastructure standpoint, refining, takeaway, so on and so forth. And they're saying, are they actually going to get their money? And then they're asking, do the economics of this make sense? My response is, yes, they should be able to make the infrastructure work. Ultra's management has worked in regions where they have been infrastructure challenged in the past. On the matter of the economics, even if you look at the low end of their expected recoveries, these folks should make money at around $60 a barrel. If you take some of the more optimistic scenarios, they can make money if oil prices go as low as $35 a barrel.
So it sounds like you think Utah will pay off for them. I mean, usually we're talking about, on the show, we're talking about the Bakken, we're talking about Eagle Ford. We don't talk about Utah a lot.
Right, and I think that's part of the reason why you see management going here. They have historically eschewed the sexy assets because they're obsessively focused on returns. And so, yeah, the Bakken, Eagle Ford, they're offering excellent returns right now. However, this asset can also offer excellent returns, and for Ultra, it provides some ballast to their resource portfolio, allows them, gives them a cash cow with which to fund expansion into other areas.
So where do you think they would be expanding then?
That's a tough question. I don't work at an energy company. I'm not a manager for that reason.
Okay, let's move on then. Over at the New York Times, they're following the battle between a small Finger Lakes town and energy companies over fracking. The town has actually banned fracking, and it's turning into a pretty heated debate over whether the state of New York should even allow fracking. So, Tyler, are activists and fracking bans actually getting companies to change their ways?
In a sense, yes. I mean, it's kind of been going this back and forth for many years now of, a lot of political resistance saying it's not safe. There's problems with some of the chemicals that we're looking at in hydraulic fracturing fluids. People don't know what's going on, afraid of it contaminating the groundwater and whatnot. So companies are kind of starting to meet them a little bit halfway with a lot of things they're doing, and they're really opening up with what they're doing. One of the great examples of it right now is Halliburton. They've created what is now called the Clean Stim, which is basically they've created a fracking fluid which is only using chemicals or things that are ingredients, that would be found in the food industry. So if you're looking at it from that perspective, then you can say, well, you're certainly not going to be worried about getting something contaminated in that sense versus maybe some of the other things they have been using previously. And at the same time, you're seeing a lot of other companies, especially in the Marcellus Shale, which is where you would be seeing things in New York, such as Cabot Oil and Gas, Southwestern Energy. They're being much more open about what they're doing in these regions, when they'll be fracking, and how they're fracking, just to kind of communicate with people, because when you talk about it more openly, you can have a discussion about it, and people are a little bit more willing to engage in you with it rather than completely resisting.
So as the article points out, on the one hand, we've got the question of accessing this energy and creating jobs. And we also have regular citizens who are making money off of this land as well.
Yeah, and I think that's kind of the fascinating and slightly ironic part of the story is the actual resistance that people are putting up to fracking is one of the biggest reasons that the United States has been allowed to actually have a shale boom. And one of the biggest reasons is because individual landowners like you and I, if we were to actually own property, I don't know, I don't, but if we were to actually own it.
My family actually owns some land in Montana.
Well, lucky you.
Check.
I don't know if it's done anything.
But since your family owns that property, you guys are allowed to have mineral rights below that, versus in a lot of other countries outside of the United States where underground land rights or mineral rights are actually negotiated with natural resources ministers. So what has happened is in the United States, because of the intense competition of going from individual landowner to individual landowner, it's making it very intense, very competitive, and a lot of companies, like these companies we just mentioned about, have to be very innovative in what they're doing so they can generate returns. And that has kind of spurred the shale fracking boom. Started down in the Barnett Shale down in Texas. It's spread across the entire United States, and now it's even starting to expand overseas because of all this technology that we're generating. Some of the fastest growing markets for shale technology and fracking services for companies like Halliburton and Schlumberger have been overseas.
All right, well, let's move on to our last story today. Devon Energy and both Crosstex Energy, the Inc. and the LP, announced that they are forming a new midstream company combining most of their pipelines and processing. Mike, what did you think of the news?
Sure. So this is a deal which I think is mutually beneficial to both organizations. Devon, for a very, very long time, there's been sort of a consistent knock on the part of the market is that they are undervalued on the basis of their assets. And management has said, you know what, we are going to prove to the market that our assets are undervalued by getting third or independent valuations from the market. Crosstex, this is a company that in recent history, they've been a bit capital constrained. And so in doing this deal, Devon proves that their assets are indeed undervalued. The implied value of their midstream assets based upon the deal price is about $17 a share. For perspective, share price right now is $65. So either those midstream assets comprise a significant part of the value of the company, or their oil and gas assets are not worth that much. I don't think either of those are the case. In fact, I think the shares are cheap. For Crosstex Energy shareholders, you get a well-capitalized partner, somebody that can go ahead and bring a little bit of credibility to your balance sheet, and in turn, you can fund expansion.
So Devon saw a small bump after the news was announced. Crosstex Energy Inc. and LP saw big jumps of 60 and 30% respectively. What did the stock moves tell us?
Right, so the stock move tells you that Crosstex Energy shareholders benefited the most. And the reason for that is, just as I said, they needed that sort of liquidity. This gives them a source of liquidity. They should be able to reduce their cost of financing substantially, and so the value of those assets increases literally overnight. Devon shares, what I think you saw is this kind of a collective yawn on the part of the market. I don't really understand it. I think the shares are cheap. As I said, you went ahead and you saw that $17 worth of the share price is right there in that asset. They have some very valuable oil, natural gas, and natural gas liquids properties. So don't get it.
So of these companies, which one are you the most interested in? It sounds like Devon.
I think that's pretty apparent, yes. And disclosure, I do own shares of Devon. I guess that is also not surprising.
Right. All right. Well, if you're looking for more energy sector coverage, you'll want to check out our special report, 3 Stocks for America's Next Energy Boom. You can get a copy just by emailing us at oilboom@fool.com or oil mailing us. You can also follow us at Twitter. That's what I almost said. At TMF Energy. All right. For Tyler and Mike, I'm Allison Southwick. Thanks for watching.